I think mid-February, late February, we'll start to see what the year is going to be looking like, at least on the housing side.
Okay.
We're certainly going to be seeing a lot as far as the job creation side. We're back to the kind of like what Roosevelt did in the New Deal, and that's really what the new administration is going to be modeling. In other words, a lot of road building, a lot of highway, and a lot of our American infrastructure, bridges, and what have you. That's where the jobs are going to come from. Now, a lot of that's we're not going to see any residual benefit on that this year. We'll start to see it maybe near the end of 2010. But at least, I think, by February, the end of February at least, we'll see, at least on our world, the mortgage world, we'll see where things are at, and I would predict, and I'll predict that at this point, that come February and so forth, we will already have realized a 4% and under 4% 30-year fixed by then. And it'll be interesting to see if the inertia that we're seeing right now as far as buyers taking advantage of the interest rate opportunities and the real estate prices, if that continues or actually
a slight shift.
Yeah. And my prediction is that it's going to keep growing all year long.
The buyer demand.
Yeah, the buyer demand is going to keep growing.
Now, would you say, given your prediction that, okay, we're here almost mid-January, if we negotiate a contract and a good purchase price, and I'm thinking as buyer's agent, try and take advantage of the residue of 2008, and you pre-qualify, lock in a rate, we can write a contract for 60-day escrow, which is what your lenders probably need at this point because they're so busy with the refinance market and the underwriting department. If that happens in February, can they get it, if the rates are improving prior to close escrow, can they then go to a lower rate?
Yeah, a lot of lenders that we're doing business with right now have a renegotiation policy that's really unwritten.
Okay.
But we call them renotes.
Okay.
And most of the lenders we're doing business with right now as Global Mortgage Group have renegotiated. The idea is that if you're locked in at a 5.5% rate and all of a sudden interest rates are at 4.5% before you close, they don't want to lose you because
because you're going to bounce.
Exactly, and so they'll go ahead and renegotiate the rate and so on. But probably the best situation to be in right now, I never advise my customers. I always say, if you were my brother or sister, I would say at this point, I think we're going to peak as far as the best deal you're going to get in real estate and the lowest interest rate you're going to see is probably going to be right in the first quarter of this new year.
Gotcha.
And after that, you're going to be losing out on a little bit on the prices. You're going to be losing out a little bit on the interest rate side. So if you can enter into an escrow, this month, next month,
right,
and 60-day escrow, what have you, and float, don't lock in your rate,
right,
then you're probably going to end up a winner on, you've got the best price and you've got the lowest interest rate and so forth. So I think now's the time to strike.
It's very interesting to hear because it's been kind of a gut feeling, and it's actually been solidifying in my own perception just in talking to you to say nobody knows. This feels like this next this little zone we're in right now is like a real magic time here in our market. In certain parts of our market, so there are some junk offerings out there, but there's some real sweet ones too. And with a dedicated buyer's agent, really sort through what makes sense for your plans. But now's the time to negotiate.
Yeah, absolutely. Yeah, absolutely.
Well, thank you, and feel free to ask